The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magicbricks webinar. Our endeavor to empower you with insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is demand up for rupees 20 to 40 lakh budget in Chennai, Hyderabad and Bengaluru. And our guest speakers today are E. Jayashree Kuru, Head Content and Research, Magicbricks, and Dr. Venkatesh Panchpagesan, Associate Professor of Finance and Coordinator with IIM Bangalore. Jayashree is a business journalist with over 2 decades of experience in working with print, online and electronic mediums with the Times of India, the Economic Times and the Financial Express. She specializes in analyzing real estate data to come up with usable solution to users. She works with consumers to provide advice on using available information to make wise investment decisions. Venki has almost 20 years of experience in academia and in global financial services industry after finishing his PhD in finance from the University of Southern California. He has also worked with Goldman Sachs Asset Management in New York between 2005 and 2008, overseeing trading research for their quantitative hedge funds. He is certified in India as a chartered accountant and a cost accountant and holds a PGDM from IIM Calcutta. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Thank you for tuning into the Magicbricks webinar. In our endeavor to make property buying decisions easier and more scientific, we have been undertaking a series of measures at Magicbricks since its very inception in 2006. Today we are proud to say that in the 15th edition of PropIndex, we have actually been able to join you on a journey which allows you to use metrics when you're looking to buy or sell property. The PropIndex is an India apartment index. Today we have a special focus on the southern region. So what is the PropIndex? It is a tool that provides detailed information on price movement, supply and user demand for multi-story apartments and single floors listed across cities. It covers a national PropIndex, a city property index, listed price monitor, a rent monitor, a yield meter, top preferred localities, demand and supply analytics, locality price range, and an editorial speak. Very quickly to deconstruct all these elements for you, the listed properties are used as a proxy of supply, and user searches and user requirements are used as a proxy of demand. When you use supply versus demand, it gives you a lot of information on what the demand in a particular locality is for certain types of property and what the supply is. When there is a mismatch, if you are a wise buyer, you will be able to make the best out of your property buying decision. The city, national and city property indices are actually a function of the amount of supply and the price movement. The listed price monitor is entirely about the price of the property. The rent monitor, as the name suggests, is about the rental values. There is an yield meter, which is a function of the percentage ratio between the listed price and the rent. The top preferred localities is a feature we introduced a few quarters ago, and we found that this is directly based on user requirements. Users wanted to know what are other users looking for, and the top preferred localities actually helps you understand what other buyers like yourself are looking for in the market. Demand and supply analytics, like I said, gives you very critical understanding about how much you should negotiate, what you should be looking for, and other such issues. The locality price range allows you to understand if a certain value has been quoted to you for a property, are you able to benchmark it within the locality? If it lies within the range, you know that you will know where your property lies in the minimum to maximum range of values. The editorial speak is a new feature again, started about 2 issues ago, where the Times property, which is the Times of India supplement on property, all the editors of Times property, of all the editions of the Times of India, have been regularly writing editorial pieces about what they perceive to be the reality of the market. So how do you use the PropIndex? This is a very important thing to understand. From an investor's perspective, this can tell you about the localities on a buyer's radar. So when you are an investor, you will know that if you buy into an area where there is a lot of demand, it's already a bumped up demand, so you may have to pay a little extra to enter that market. An investment in a high-ranked locality is likely to have better transaction prospects given the buyer interest. So if your property lies in an area where there is huge buyer demand, as an investor, you will find lots of buyers who will be willing to buy your property from you, and you will be able to create a good exit strategy for yourself when you enter as an investor. A property in these high-ranked localities are likely to have a higher demand for lease. In many areas, especially when there is an economic hub nearby, which could be an educational hub, a manufacturing hub, an IT hub, these are all areas where there is concentrated demand for rental properties, and this can reduce the vacancy period. Remember that as soon as you get a property, you take possession of your property, there are a lot of outflows that start, your maintenance charges, your municipal taxes, and so on. And if your house is leased out, this outflow gets taken care of, and you actually get earn an income. This income can also help you in repaying your EMIs for the property that you have purchased. Rental is also likely to be relatively high in preferred localities. That is an obvious fact, but this is something that you should keep in mind if you are looking for a regular rental return till you decide to exit your property investment. The budget-wise demand tells you that it can serve as an indicator of market trends, and the developer community can accordingly address the demand. If you are a developer, why should you use the PropIndex? If you know what the demand is, you will be able to create supply in tandem with demand. If you look at what has happened in the market so far in the last 1 year, there has been a huge amount of stock, and do visit the PropIndex.magicbricks.com. You will be able to click onto your city. You will understand that there is a huge mismatch in what the buyer is looking for and what the sellers have put in the market. There is across cities, the demand is for 1 BHK and smaller size properties, which are lower priced. However, the market in most cities is undersupplied in smaller units and oversupplied in larger units. Clearly, the Indian property market is a speculative market where the developer is building according to what he thinks he should sell and not in tandem with what the buyer is demanding in the market. This has led to a huge amount of excess stock in certain segments and low stock supply in areas, those segments that have high demand. If people are looking to invest in the residential segment, you can also target the segment with the highest demand. So the investment is likely to have higher buyer interest and transaction prospect for the developer. Now, if you look at the demand-supply analysis, the segment which is evenly matched in terms of demand and supply is not likely to afford much negotiation margin to a buyer. A buyer may want to explore an opportunity in a higher segment. Suppose the supply and demand are completely evenly matched. Go for a higher segment where supply outstrips demand. You will be able to get better incentives from the seller on the available options, and incremental expenditure may not be as high as compared to the original budget. Suppose you started with a budget of 40 lakh. You are looking for a property, but you find that properties in 40 lakhs there is either undersupplied or there is even supply and demand. Suppose you push your budget up to about 50 lakh and say, in 50 lakh, what can I look for? you will find, suppose that is an oversupplied segment. Now go back to the seller and say, look, I don't have 50 lakh. I'm willing to consider this. Would you care to negotiate with me? If it is a price point that is slightly higher than what you budgeted for, but if it also gives you, if it is slightly higher than what you looked for, but it also something that you may be able to use as a stretch target, you may end up getting a larger property at lower and not be able to, not be too stretched about it. It also tells you about the nature of a given market in terms of what segment of demand it caters to. From the developer's perspective, this can assist in product positioning of a new launch in the market. So let's quickly go to the key findings of the South Indian market. The city indices of Chennai and Hyderabad rose by 2%, while it rose by 1% in Bengaluru. Demand for 1 BHK units grew by 1 to 4% across India. Residential houses saw a rise of 1 to 4% in demand across cities. The South Indian markets have a greater propensity towards residential houses. Apartments are popular in those localities that are driven by IT or manufacturing, where the demand is not from the city itself, demand is from other parts of the country. In the last 1 year, maximum rise in demand was noted for properties priced at 30 to 50 lakh. The city index in Bengaluru rose by 1%. Across India, the property index has been relatively stable. The rental values rose by 1 to 11% in nearly 50% of the tracked localities. As a rule of the thumb, when the consumer stops purchasing, then rental markets become stronger. When the consumer is actively buying, the rental markets kind of plateau out. The city recorded one of the highest rental returns of 2.2 to 5.1 among all the cities. This is a significant return because in the residential market till now, the average rental yield has been about 2 to 3%, not more than that. Whitefield, Sarjapur Road and Electronic City continue to top the preference charts. Clearly, IT is still the driver in Bengaluru. Almost 30% of demand each was noted for properties priced at 40 to 60 lakh and 60 lakh to 1 crore. So roughly 40 to 1 crore is the budget where there seems to be about a third of the demand. But the supply was just about 45%. So there is a lot of supply and demand is about 30%. Whitefield, Sarjapur Road, Kanakpura Road, Yelahanka and Banerghatta Main Road recorded the maximum supply in these budget categories. Let's quickly go to Chennai. The city index rose by 2%. Over 50% of the tracked localities witnessed a rise in capital values by 1 to 7%. Guduvancheri, Oragadam, Sriperumbudur and Padapai offered properties priced up to rupees 20 lakh. This is a very important element of the Chennai market, that you can actually think of properties in the up to 20 lakh category. But when we did we fine-tuned this study, we found that most of the property below 20 lakh is for plots in peripheral areas, far-flung areas away from the city. However, the demand for in the up to 20 lakh is for apartments that can be moved into and used. Therefore, even though there is a lot of property that is in the up to 20 lakh category, the mismatch is between the type of property that's available, and therefore the market has not been very robust. The city offered a gross rental return of 1.8 to 4.2%. A rise of 4% was noted in demand for properties priced at rupees 20 to 40 lakh, while the supply dropped by 1%. Now, this is where a lot of end users are buying. 20 to 40 lakh, people who are young professionals coming to the city to work. Remember, Chennai has a very strong manufacturing demand and a strong IT segment. Both of these act as a magnet for a lot of young professionals to come to the city and live there and work there. This is where you've seen, this is what is driving the rise in demand of 4%. An equal demand and supply of 18% was noted for properties priced at rupees 1 crore and above. Interestingly, in Chennai, a lot of this 1 crore and above demand has moved back to traditional city areas where because of redevelopment, a lot of supply has also come into the market. The demand for 1 BHK units noted a rise of 1 to 3% across the city except in central Chennai. The consumer is very, very savvy. The consumer knows where to look for the properties. If you're looking for smaller properties, going by the trend in Indian cities, it is normally on the in the suburbs and periphery of cities, and that is where the consumer starts looking for these properties. Hyderabad, a favorite market of mine, I see a lot of potential in this market. The city index rose by 2%. However, Hyderabad has been impacted by policy changes, by political changes, by the Telangana issue. A lot of the resolution has led to a rise in sentiment. Over 55% of the tracked localities recorded a drop of 2 to 8% in rental values. Rental returns in the city range from 2.6 to 4.4%. Gachibowli, Kondapur, Kukatpalli and High-Tech City remain the preferred locations for sale and rent. The driver clearly is the IT segment. Maximum demand of 37% was noted for properties in the affordable category of 20 to 40 lakh, while the supply stood at 25%. Hyderabad is rapidly seeing a lot of oversupply in the market, but the excess supply is not where the demand is. The demand is in the 20 to 40 lakh and with about 37% of supply, but supply is only 25%. The demand is 37%, supply is 25%. Demand for independent houses saw a rise of 4% from the previous quarter. Supply at 19% lagged demand by 17%, not a significant lag, but independent houses as a category seeing a rise in demand has happened only very recently. The end user is kicking in, and the end user demand is now for independent houses, and Hyderabad has been driven by independent houses demand. Adibatla, Shadnagar and Shamshabad offered properties within the 20 lakh range. So why is the PropIndex important? It helps real estate developers, as I said earlier, help understand buyer preferences in property type, size, configuration, budget and locality. Government offices and ministries of urban development can use this to help assess the demand and supply gap and real estate policy making. Construction organizations can forecast demand and supply situations at the region and locality level. This is the only index which covers the city at the locality level. Consumers can use this information to endorse their home buying decisions. If you've decided on a budget, look for the areas of the city where you can find these properties. Look at home in your budget, you'll be able to figure out how others are looking for property in this segment. What are the types of properties available and how much you can negotiate, you can understand from the supply versus demand. You can understand your localities and cities better. The real estate trends and analysis gives an insight into the real estate price movements at the locality level and quarter-on-quarter changes. How to improve your financial status by looking at the returns on investment data, the top capital and yield gainer localities in the respective cities. How do we compute the PropIndex? It is based on listings of apartments and their capital and rental values on the website. Individual properties are aggregated into localities, weighted to cities and then to the national index. Weightage is based on the supply of properties within the locality or the city. Magicbricks has over 700,000 active properties hosted by more than 140,000 active users in 300 cities and 10,000 localities. That's a huge amount of data we compute the PropIndex on. The information till date, 11 cities, 620 localities, Delhi, Mumbai, Chennai, Kolkata, Bengaluru are the main metros. Pune, Hyderabad, Ahmedabad, Noida, Greater Noida, Gurgaon and Ghaziabad are the tier 1 cities. Capital and rental value trends are analyzed quarterly. Yield on investment is given quarterly. Extensive user demand analytics, demand versus supply statistics, the top 10 preferred localities city-wise, home in your budget, and Times Property Editor's perspective on real estate markets. Thank you. Over to you, Aradhana.
Thank you, Jayashree. Handing over the session to Uma.
Thank you, Aradhana. Thank you, Jayashree. This is Uma Sitaraman. I am the lead researcher with the Real Estate Research Center at IIM Bangalore. We conduct research on housing supply and demand focused on the Indian real estate sector, on affordable housing, and have a lot of initiatives working on improving transparency in the real estate sector. And when it comes to transparency, what happens most is consumer forms a very big angle with the entire real estate segment, because consumer is an important part of this entire industry. But most often, consumer is the one who is most neglected. So while we work with policymakers on understanding what their issues are, while we are working with academicians, industries, etc., the least focus happens to be on the consumer. We wanted to kind of correct this. So this was the reason why we brought out this housing sentiment index, which looks at what consumers think. I mean, what do consumers feel? What is their thought on what housing prices are going to do? How are they going to behave in the next 6 months to a year? And also, at that point in time, about a year and a half back, indices were there in housing, but were very much focused on registered values. So the value that is actually registered with the state government authorities. So there was nothing that was capturing sentiments at all, and this is like a very novel idea in terms of putting out a sentiment index in the real estate sector. What we aim to do with this index is to capture what home buyers think specifically over the next 6-month period. And this is based on a very commonly used methodology called the diffusion index methodology, very widely used to capture sentiments across the world. The sentiment index itself ranges from 0 to 200. So what a 0 means is that all home buyers surveyed think home prices are going to drop in the next 6 months. While a 200 at the other end means all home buyers think home prices are going to go up, and 100 being the neutral value. Now there's two things to look at here. So one is where the index stands at right now. So by city and also nationally, we have index values for each of the 10 cities we survey. What is the index value for each city? That's important. But more important thing is to look at the changes in index quarter to quarter. So how has the index been performing in the last 3-4 quarters, in the last 1 year? Has there been any major moves or volatilities in either direction? So that is something very important. Specifically, if you look at the last 3 quarters, there was a huge uptrend in May, in the month of May, soon after the general elections were announced and the majority government took over, where we found that most cities marked an uptrend. But if you look at this quarter, all 10 cities surveyed have witnessed a drop, and some of them very significant drops. And the last quarter, there was a small dip. So if you look at the trend, it's more in terms of seeing what people think of. So there was a euphoria after the elections where people thought they could expect a lot, and a lot of things were going to change very soon. And now, putting things into perspective, so people are realizing that yes, there is a new government, yes, there are things happening, but it is going to take some time. And what is the implication of all of these changes on home prices? And it's probably going to take a lot longer than what I thought. So this is something that sentiment reflects. As of now, we cover 10 major cities, and within each of these cities, we cover micro markets as well. Moving on to the next slide, where we highlight the Q3 trends. For this quarter, the aggregate buyer HSI, which is the HSI that reflects the mood across India, came down to 81, and that's a sharp drop from where it was last quarter at 114. We parallelly do a seller survey also to gauge what sellers think, and what we have found is that sellers have always been a lot more optimistic than buyers, and this is not too surprising. But this time the seller index also witnessed a slight drop in sentiment, and again this follows a drop in the last quarter also. But the sellers still are a lot more bullish, so their HSI still stands at 154, and compared to an 81, it shows that they really are a lot more bullish than the buyers. So coming to the specific cities that we are covering today, the HSI for Bangalore dropped by 17% to 103, and now this is following a drop of 13% in the previous quarter. So all along the survey, and we have been doing this for the last 7 quarters, Bangalore has been one of the cities which has actually been the most bullish, which has always posted positive sentiment. And even now, it is still in positive territory, but getting close to neutral at 103. There are some possible factors which could be Bangalore is basically an IT-driven market, a job-sensitive market, and recent salary hikes have not been as great in the last 1 or 2 years. Could be this is the reason to bring this down. Another thing was as of when the survey was done, interest rate cuts had not been announced. So about 8 to 10% of our survey respondents, when specifically asked this question on whether you are waiting for interest rate cuts to come down, wanted interest rate cuts. So this was another possibility. Another major effect was the guidance value increase, which came into effect around November, December last year. And in some areas, there was about over close to 20% guidance value increase, and this would also have created some amount of negative sentiment in the sense that people now have to shell out more for registration and stamp duty when they make their purchase. Moving to Chennai, HSI also fell by 21%, and Chennai has been one of the most stable markets, a very stable market which did not post major deflections on either end, and 21% is a major drop for Chennai. And this is the first time also that Chennai's HSI is moving down to below 97. So some of the factors are very common. So most of these South Indian cities are very job-driven. A lot of buyer interest. Buyer interest is way more than the investor interest here. So the job markets, interest rates, all of these are a very they have a strong bearing on the sentiments. HSI for Hyderabad decreased by 8% this time, and this again follows the decrease of 12% in the last quarter. So as of this quarter, HSI is at 95, slightly below the neutral level of 100. Hyderabad, as Jayashree mentioned, has been one of the cities which has witnessed a lot of volatility in the past quarters. One is due to state division, infrastructure issues, and Hyderabad, it's the confusion over Hyderabad's role itself. So a lot of issues that have actually played on Hyderabad's sentiment. So we will have to really wait a couple more quarters to see how Hyderabad behaves going forward. Moving on to the next slide, where we will share with you some analytics. So what do we do with the data that we collect? So there's a lot of questions that we ask, and this can primarily be divided into demographic questions where we ask for the age of the person, what's your salary range, what is the property range you're looking at, etc. Another one is the micro market trends. So within the city, which is the area that you prefer most? And the other questions are based on actual sentiment, capturing the sentiments. So do you think home prices are going to go down, up, or not change at all? And if you do think they're going to move up or down, how much do you think it's going to move up by? And how long are you going to are you willing to wait for factors, other external factors to correct? So with all of these responses, we perform various analytics at our end, and we'll be sharing with you some of it during this presentation. One of the most interesting ones being the HSI by price range. So if you look at the prices that apartments are priced at, or properties are priced at, a huge 47% of respondents are looking for property below rupees 40 lakhs, and an average of 15% of respondents are looking for property below 20 lakhs, and this average has been over the last 3 quarters. Which goes to show that like almost close to 50% of respondents are looking for property below 40 lakhs. And while you, as Jayashree mentioned, if you look at the supply-demand scenario, most of the major cities, properties are priced way above that, way above 40 lakhs in prime areas, and not just prime areas, even further moving towards the suburbs. And this has been one of the major issues for buyers, where property prices are being seen as being too high at this point. About 25% are looking for property between rupees 40 to 60 lakh, which is the next bucket. So there's a major portion that's looking for property at lower priced properties. And this is something that we have always been working at our center, focusing on affordable housing. How do we get developers to focus on affordable housing? What are the incentives we can provide? I mean, both governments, corporates, etc. How do we incentivize people to move towards affordable housing construction? Now, HSI properties above a crore decreased by 37%, and this has always been the trend. So when you have negative sentiment, the highly priced properties are the ones to fall first and fall hard also. However, there's only about 8% of respondents who belong to this bucket. In Gurgaon, 13% are looking for property above 1 crore. Now, this is just to show that in terms of cities, how much cities differ. So this NCR region specifically, it's an investor-driven market, and there's a lot of high-end property that's up for sale. And this is where you've noticed a lot of fall also in sentiment. In Mumbai, 12% of respondents are looking for property above rupees 1 crore. Now, these are some of the high-priced markets. Whereas at the other end, you have Kolkata, where 35% of respondents are looking for property below rupees 20 lakhs, followed by 21% in Hyderabad. So just this goes to show how much cities differ, and the characteristics of each city is totally unique to itself. Moving on to the next slide, where we cover analytics specific to Bangalore. 31% of respondents are from South Bangalore, and again, this is where your IT belt, south and east of Bangalore is where your IT belt is located. And this saw a drop of 15%, and 31% from East Bangalore also witnessed a drop of 11%. So this time, Bangalore, as you can see, there's been a drop all across the entire city. Bangalore North, and that's where the International Airport is located, also witnessed a drop of 17% in HSI. In terms of reasons for purchasing property, 44% cite financial reasons, while 45% are waiting for prices to come down. Now, you see the huge difference in HSI between the ones who are blaming their own finances when compared to the ones who are blaming external factors like prices. So while people who think they are not able to buy because of their own situation seem to be a lot more optimistic, and this has been something that we've noted over the quarters. People who are waiting for external factors are a lot more pessimistic. 49% want to buy within the next 6 months, while 21% can wait for a year or more. And this is again a good thing for developers. There's a huge population that is still looking to buy quickly. It's just that they are probably waiting for certain things to correct. And this trend is again something very common across cities, with an average of about 8 to 9 months wait time in the last 2 to 3 quarters. A lot of buyers are eager to purchase, provided they get the right property at the right price. 52% prefer flats, followed by 24% to prefer land. Again, in southern regions, you have both Bangalore, Chennai, Bangalore, and Hyderabad. You still have a lot of buyers looking at buying land as compared to the northern belt of NCR and Mumbai. 32% of those who already live in their own house are looking to buy. Now, this again is a good sign in the sense that these 32% are looking to either move to a bigger property or are looking to encash or are looking at the next property as an investment. And 52% of respondents currently live in rented accommodation. All of these are again very healthy signs, meaning that there is a huge demand. It's just that if we can get the supply and demand situation to meet, there will be a lot of transactions happening in the next 6 to 8 months. Moving on to Chennai. 63% of respondents are from South Chennai, and 17% are from Central Chennai. Now, Central Chennai this time witnessed a huge drop, 21% drop in sentiment. But again, as mentioned, this is the first time Chennai is actually exhibiting this amount of volatility, so we will wait for the next quarter's results to see how it's going to work out. HSI for those who are planning to buy property as an investment is 74, while HSI for those who plan to buy as a place of residence is 105. So again, you can see the difference between what investors think and what buyers think. 45% prefer flats, followed by 17% to prefer land. Again, there is still a major part of people who prefer land, 15 to 20% on the average. 31% of those who already live in their own house are looking to buy, and 56% respondents who live in rented accommodation and are looking to buy. And this 50%, there's on the average across all cities, there's about 50% who are actually living in rented accommodation, looking to move into their own houses. In Chennai, 27% of respondents belong to the IT sector and another 8% belong to the manufacturing sector. So it is the IT and manufacturing sectors that are basically driving the demand in Chennai. Moving on to Hyderabad, 30% are from South Hyderabad, which witnessed a 6% decrease in HSI. And East Hyderabad, which comprises 26% of respondents. Again, Hyderabad, you have quite a major portion that's either looking to buy in the south or in the east of Hyderabad, but both witnessed a decrease in sentiment. 41% are looking to buy property within 20 to 40 lakhs, and another 24% are looking for property within the 40 to 60 lakh range. Again, these are the most popular price ranges. And 21% are looking to buy property below rupees 20 lakhs. Now this again is, like the demand is heavily skewed in terms of prices. 19% of respondents belong to the IT sector here, and 39% in Hyderabad prefer flats, and 15% prefer villas. Now Hyderabad is known for its preference to villas. So in general, among the 10 cities surveyed, it is Hyderabad respondents who actually prefer wanting to own a villa. Moving on to the next slide, just to give you a snapshot of how we actually conduct the sampling. This survey is conducted across 10 cities every quarter, and we've been doing this for the last 7 quarters. There's a standard questionnaire which is mailed out, which contains the questions that I had referred to earlier. And once the data is collected and validations are done, we conduct the research and analytics at our end, at IIM, and put out these interesting insights so that you can all get an insight of how what the buyers think and how we think property markets are going to behave in the next few quarters. So that's it from my side. Handing it over to you, Aradhana.
Thanks for sharing this insightful presentation with us. Let's quickly take up the questions now. I would request Jayashree to read out the questions and their answers so that all our users may listen to your insights.
Sure, Aradhana. Thank you, Uma. Let's quickly go to the questions. Now, let me go to Atreya's question. Is it wise to buy a plot of flat in Bangalore for investment? Currently, there are 2 ways of looking at it, Atreya. Plot appreciation is always more than apartments. But you will be, the amount of loan that you can get to buy a plot is not as high as for flats. Also, it depends on where you're buying your plot. Apartments are something that will yield you regular returns, the rental returns. Plots are more or less something that you have to buy and leave till the leverage value goes up, and so that you can exit whenever you decide to do so. Also, if you're buying a plot, remember that you should be looking at plots from established developers within gated communities. They are easier to maintain as a small retail investor. Do not go with unstructured sellers where the plot is difficult to protect. Apartments, on the other hand, are something that are available in all ranges. If you can actually start your search, you probably are at the beginning of your search, and it's good that you are asking these questions. What you should do, Atreya, is fix your budget. Take the budget and go to a site like Magicbricks. Put your requirements that this is the budget and what are the options that you get in plot and flat. Now, if the plots are available within your budget, with good developers within gated communities where the safety of the plot is ensured, do for them. But if you're going to go into large, very far away peripheral areas, even 5-7 years may be too little for the kind of appreciation that you're looking. Apartments, on the other hand, are normally within master planned areas, and you would be able to get rental returns. But keep doing your research. Normally, a property research, before you buy your property, users tend to do, they spend about 5 to 6 months doing their research. Because it is a very high ticket investment, you must do that research. And both the PropIndex and the Housing Sentiment Index actually are tools that that help you in your search. So keep looking and tell us, do keep coming back to us. We'd be happy to answer more queries from you. Venki, you would like to add something to that?
Yeah, can you guys hear me well?
Should I read the question out to you?
No, I got the question. Can you hear me now?
Yeah, I can hear you now.
Okay, good. I just wanted to add one more thing. I think the due diligence in land is a lot more than in apartments. So I think as Jayashree mentioned, the risk is higher and therefore the return in land plot is also higher. But I think the bigger thing is if you can pool a few people together and buy land, make sure that all the land uses and things like that are all being proper. Then I think it's an investment that you can consider for at least a medium term investment.
Sure. A very critical point there, and thanks, Venki, for making that. Investing in plots does yield you better returns, but the risk is very high. If you're buying, the reason why I asked you to go with gated communities and so on is because you would be then able to ensure that somebody is looking after your property. A little bit of erosion of land on the edges and you won't be able to check it out as a retail investor. And if you invested in whatever the property that you've invested in, keep visiting your site while you wait for it. Do not let it lie for 5, 7 years. There have been many instances of land being encroached while you thought that you were the legitimate owner, and once something happens like that, you will be stuck in legal tangles. Let's quickly go to the next query. There is Arun Mehra who says, out of the 3 southern markets, which one would you consider the best for investment? Arun, this is too general standpoint for me to be able to give you an answer, but I'll try and give you some pointers. There are reasons why you are investing. First, start your budget. Start with your budget. Where would you like to invest? What is the reason for your investment? There are many people who say that I'd like to buy it and just leave it. I'm not really interested in regular returns. There are some people who say, I'd like to have a portfolio of investments. While I take my loans and buy my properties and so on, I would like to get a regular inflow which helps me pay off the EMIs, contributes to my monthly income and so on. Once you decide that, then think of which part of the city you would like to invest in. When you invest in places where there is a very strong economic driver, like for instance, it could be the IT corridors, it could be the manufacturing corridors, it could be the educational hubs. These are areas where you get very good rental, consistent rental demand. The volume of rental return that you get depends on market cycles, but a consistency of demand ensures that you will always get a steady return from that. Go and invest in areas where there is high demand. When you're investing in an area in high demand, whenever you decide to exit that market, you would be able to find buyers who would like to buy it off you. If you invest in very, very peripheral corridors, you will have to try that much more to sell your property till that area comes into the high demand category. I hope I've answered yours. Venki, any additions to that?
Yeah, the way I look at it is I follow a 2-step process. One is at the macro side. If you look at the 3 cities, Bangalore, Chennai, and Hyderabad, Hyderabad has just got a new government. There's a lot of uncertainty about what the government is going to do. So it is a risk worth taking if you're ready to wait for the long term. Otherwise, there's a lot of money that has left the market. So, at least in my opinion, for the medium term, Hyderabad is going to be In terms of Chennai, you have a physical uncertainty in the air. There is also some amount of manufacturing base which can help you if the economy turns around. So I think Chennai, between Chennai and Bangalore, I would think the Bangalore is a slightly better bet, mainly because it's largely IT focused and IT is a lot of export orientation. So as long as the economy in the other parts of the world is doing well, it's definitely going to be stable, more stable than the other parts. That's the macro side. The second step is, as she pointed out, is the infrastructure in the area. So within each of these cities, there's going to be some areas which are highly open to infrastructure. They've got better infrastructure. So you would want to go into those areas within the city. So I think you would do it in two stages, look at the macro picture and then get down to the micro level. So going by that, I would say Bangalore is slightly more stable in both those terms than the other two.
Right. And there are a lot of people who are also looking at Hyderabad. Since he's done the comparison between Chennai and Bangalore, Hyderabad is considered one of the easiest market to enter because of the price points. The price points are low and it's easy to enter with whatever budget you have. But remember that in Hyderabad you have to wait for policy to play out, so you should come in as a slightly longer term investor, maybe 3, 5, 7 years. And Hyderabad fundamentals are good. It's got good corporate investment. There has been a lot of commercial take-up that has happened in Hyderabad. So even that is a market that you may consider. But ultimately, you know, today again you are at the beginning of your search. You must be sure of why you're buying, where you're buying, how easy it is to buy. But look at the track record of your developers. Look at the legality of the property is very clear before you start your process of buying. Let's go to Ashley DeCruz's question. Which location would be good to invest, North Bangalore or South Bangalore, where the metro is coming up? Actually, South Bangalore is an established area. There are good drivers, good demand, lot of demand, and at a higher price point. North Bangalore, all the way from Hebbal to Devanahalli, you have a large stretch where you can buy. And here it is a more, it's a newer market. The demand is still settling, and you, if you want to exit your investment, it will be a longer term investment. It will be in the longer term. You have all types of properties available in North Bangalore, slightly less expensive than South Bangalore, but this is the comparison that you should be looking at. Zenki?
Yeah, no, I just wanted to add one more point in terms of water. I think if you're looking at buying properties where about 5 years from now things will be stable and you're able to cash out, so I'm assuming you're not an investor who's going to look at profit within 6 months. So if you're going by that 5-year maturity period, I think North Bangalore has some structural issues in terms of having the ability to get basic infrastructure to go with the project. South Bangalore is a little more established, and as Jayashree said, the ticket size and the price levels are already high. But I think in order to play it safe, if you are a risk-averse investor, I would suggest South Bangalore. If you're willing to take a little bit more risk, then I think North Bangalore is probably good.
In a slow market, is it good to buy property in the central part of the city as a secure investment? Asked Rajesh Kotapalli. Now, Rajesh, it's like this. In a slow market, what you're actually asking is, should you buy in an established area? A slow market where the prices have not risen for the last 2 years is in effect actually a discounted market, because if property prices had kept rising according to the consumer price index and the rising values of you would have seen that the prices would have been much higher than what they are today. So if 2 years the values have held, it is actually a slightly discounted market. Established areas are those where the values are already high. It is more difficult to enter at price points that are comfortable to you. So in a slow market, should you enter established central parts of the city? Yes, definitely. Keep looking, but do understand that when you do say slow market, no developer has started dropping rates significantly. You may be able to negotiate better values. You may be able to what the developer values are in the market, the listed values, and what you can get from other investors who are willing to exit their investment may be better negotiable. But in a slow market, a slow market does not mean a deeply discounted market yet in the Indian context. Venki?
Yeah, no, I think I would like to reframe the question. I think the slow or fast in the market is really shouldn't do too much to your strategy, because your strategy should be determined by your ability to take risk and the duration over which your ability to hold that investment. So I think a slow-moving market just suggests that it will take a little bit longer for you to get out. That's all about it. But I think I would say that if you go to a separate, more established area, you're going to pay a higher price, because obviously these are established areas and the market already has priced the benefits of being in that area. So I think I would suggest that don't go by slow or fast, just go by your appetite for risk. If your appetite for risk is high, then try out areas where, as Jayashree said, there could be bargains to be obtained, but there is going to be some risk that you need to take.
Yeah. Let's put the next question. There is V. Sridhar who says, does PropIndex consider infrastructure developments like new roads, expressways, flyovers, upcoming SEZ, commercial developments, etc.? Sridhar, the PropIndex is based on the listed values on the site. While we do use all this in our analysis, and when we give you the key takeaways, we are constantly analyzing why the values went up or down. However, the market factors all this. If you look at what listed values indicate, it actually indicates what the seller's intention is and what the seller expects his values to be. When there is a flyover, values do go upwards. When there is a lack of governance, or for instance, bad solid waste management, very difficult traffic conditions, values start dropping. When the seller puts his value on the site, unless it is very close to what is being transacted in the market, the seller does not get enough buyer inquiries. So sellers would put what is closest to the market transaction value. As a result, what we noticed is that PropIndex is based on listed values and expected what the consumer is looking for in terms of price points. When this happens, the market is taking considering these factors, and not that the seller is taking these, not that Magicbricks PropIndex is. PropIndex is untouched by hand. PropIndex is dynamic data. It's based on data that comes from the market. As a result, our analysis is does reflect what's happening in the market in terms of infrastructure, in terms of SEZs, commercial take-up, and so on. Let me give you a small example of Hyderabad. 2 quarters ago, when the rest of the country's commercial markets were struggling, Hyderabad saw the highest take-up of commercial space. In that quarter, you did not see a lot of residential activity in the market. However, when you saw the commercial take-up translating into residential demand, it took a quarter. There was a lag of a quarter. But the commercial development clearly strengthened consumer sentiment, and that showed in the HSI in that quarter. So, yes, we do take everything into consideration, but that is largely as a reflection of what the market takes into consideration. Venki, would you like to add to that?
Not too much. I think you summarized it very well.
Okay. Let's go to the next question. We have Gawai Eknath asking, what are the pros and cons of buying in this budget in Hyderabad in light of a lot of digging due to infrastructure development? Gavai, this is a very pertinent question that you asked. I'll give the example of what we have noticed happens to values during the construction of any infrastructure project. When, for instance, a metro is announced or a huge drainage project is underway, as is happening in Hyderabad, in the Ashok Nagar area and so on, you see a lot of drainage infrastructure being put into place. During the period when the construction is happening, it is a very difficult period for consumers. But you know that there is future potential in that locality. During the construction period, we see either a drop in vacancy, a drop in occupancy, or we see a drop in values themselves. Rental values are more sensitive to these changes than capital values, but even in capital values, we see a drop in demand or slight drop in demand. But about 6 months before the development is complete, the infrastructure development is complete, we see a bump up in values, and when the infrastructure work is complete, we see a 15 to 20 or sometimes 25% rise in values in a reasonably in the medium term. Now, this is a good indicator of how infrastructure impacts property values. So today you're saying the pros and cons of buying in this budget in Hyderabad. I would say go ahead and buy in those areas where you do see infrastructure development. If you're buying there, you will end up getting at competitive values today, and you know that there is future potential. A good infrastructure project always bumps up your property values. So do go for those areas which have future potential, because remember, you're going to hold your property investment for at least 5 years. Venki?
Yeah, I think just one point to add there. I think a lot of appreciation happens at the time of announcement, and then there is some appreciation along the way as the project or the infrastructure gets developed. The key thing is if you are buying an established, already a finished office, and you are planning to live there, that is one thing to consider, versus where you are trying to rent it out. So you should expect some rental drop during the time of construction, because that is going to be, as Jayashree mentioned, a lot. Hello, can you guys hear me?
Yes, your voice.
Venki, we can hear you.
Sorry. No, I think. Yeah, okay. So now what I was saying is that there is going to be a drop in rental yields around during the construction. So if you are buying a property for the sake of renting and then trying to take advantage of the appreciation at the end of construction process, then do plan for a drop in the rental values. So that's one thing that I wanted to add.
Great. We have a question from Shekhar Ramakrishna, who asks, East Bangalore is growing very fast. What are the amenities one can expect in this budget here? I'm impressed by the fact that a lot of consumers are actually taking the budget 2015 into consideration and asking a lot of questions. Let me invite all of you to a live webcast on budget day on the 28th of February. The finance minister will be presenting the budget between 11 and 1 p.m. and we will be having a live discussion with some of the leading experts in the country between 3 and 5 p.m. on budget day. Do join us for a live webcast that day, and if you have queries about the budget, do keep posting those queries to us at editor@magicbricks.com, and we'll be happy to incorporate those in the budget discussion. However, let me come back to the question that you asked. East Bangalore is growing very fast. What are the amenities one can expect in the budget? It is like this. I'm sorry. It is like this. When a city grows very fast, the city needs a lot of I'm sorry.
Do you want me to jump in early, Jayashree?
Please.
Yeah. So I mean, on the budget question, directly to answer your point, There's not going to be too much. This is my opinion. There's not going to be too much for residents of East Bangalore or people looking to invest in East Bangalore, because the problems in East Bangalore come from two areas. One is, of course, infrastructure. As I mentioned, water is a big deal. There's not much water in East Bangalore. And so there is a huge amount of supply that's going on, and more projects are being lined up. So the dynamics or pricing that's going to happen in that market is going to be limited by local factors and much less to do with the central government factors. But clearly what can happen is financing could be made cheaper. There could be some tax implications that can come along the way, and those are all from an investor demand perspective. But my guess is that whatever it is, at the end of the day, that there's going to be a price cap in that region driven largely by the local infrastructural issues.
Right. And Shekhar, one more thing that you should take into consideration is that the union budget gives the direction that the government thinks the country should be moving in. How it translates on the ground, there are two factors here. The union budget is like an indicator, and the state budget will actually tell you what's happening. There's a third tier, which is the city budget. While it's interesting that you are looking at the union budget, do track the state and city budgets for specifics, because the city budget is what determines what are the kind of roads, the civic facilities that are going to come up in the city. Like Venki said, the taxation and so on, which is a pan-India feature, that is what you will see coming in the union budget. There is also one more thing that I would like to tell you here. The budget will also impact sentiment. The reason why IIM Bangalore and Magicbricks together decided to assess consumer sentiment was because we felt that in India it is not a crisis of finance. The real estate market, if it was only based on how much finance is available to them, would have been it would have been a far steadier graph than today. The crisis is one of sentiment. There have been some bad business practices. There have been some problems with the market, which is why the consumer sort of gave a thumbs down to the market. Today, what you're seeing is consumers saying, I don't think this is the right price. I don't think this is the right time to buy. But if the budget can actually impact sentiment and give users the feeling that things are going to be okay, then the consumer will start buying, and you will see a lot of bump up in not only infrastructure projects, but in how the market is going to respond to that. Let me go to the next query. We have Ganesh who says, I have identified a property, an individual house under construction in Bangalore, Kadigowda area, Kumbena, Agrahara village. But the problem is the land is not DC converted, and layout is panchayati approved, but now coming under BBMP limits. Can I buy this property? I'm looking for rental income. Now this property is ground floor. After certain duration, I can build 2 more floors. In RTC extract, still it's showing under actual landlord's name. I would always say, this is Ganesh Samudrala. Ganesh, it is very risky to buy village land. When you buy the land and it is not DC converted, you're going to have huge challenges when it comes to converting it on your own. We always tell individuals, unless you are really savvy and you know how to go about it, or have a really good advisor, I would say that you should actually look within the city, and you should be able to find things within your budget. It's easier to maintain if it is within gated communities, if it is a project that where land titles, someone is ensuring that land titles are clean. It's easier for you as a retail investor than buying in village land, which is more difficult to maintain. Thank you. You want to add to that?
Actually, I dropped out in the middle for a second. Can you repeat the question?
The question is that he has identified a project in Bangalore, Kadigowda area, Kumbena, Agrahara village. But the problem is the land is not DC converted, and the layout is panchayati approved, but now coming under BBMP limits. Can he buy the property? He's looking for rental income. Now he can build the ground floor. After a certain duration, he can build 2 more floors. In the RTC extract, it's still showing under the actual landlord's name.
Yeah, so those are all. Yeah, I mean, it looks like there's a lot of red flags there.
Even I would raise the red flag and say if the title is something that you have to check for, and if the development control rules are still not in favor of residential development, your antennae should go up and say that let me try for something that is more where the legality is ensured.
Right, and also I think there has been some historical precedent in Karnataka where the panchayat land which gets into the BBMP has been questioned by through litigation. So if something like that happens down the road, then you will have a much longer litigation cycle. So not only you have a type problem here, but you also have a conversion problem here. So I would be very careful going there.
Right. Aradhana, we'll take the last 2 questions of the afternoon. There is Praveen Biradar who says a lot of new projects are coming up in different parts of Hyderabad. What new technologically advanced facilities, amenities can we expect, or will it be the same usual facilities? Praveen, it's very good to say that I would like a technologically sound smart home. We are still a while away from that. There are some developers who have been building smart homes which are gadget friendly, technologically enhanced. Your safety and security is ensured with computer assisted cameras and so on. But remember that the smarter your home, the higher will be the maintenance, monthly maintenance that you pay for your home. This is the factor that many buyers don't realize, and they end up investing in houses thinking it is very smart and therefore very modern. But remember, you have to balance the benefits of a smart home against the outflow that you have to pay. Venki, you want to add to that? Okay. Let me go to the next one. Sorry, Venki, we can't hear you. Are you saying something? Let me go to the next question, the last question of the afternoon. Kathir Hussain says, I want to purchase an individual house within a budget of rupees 40 lakhs where I expect drinking water and good connectivity to city center. Currently, I'm working in high-tech city. Today, you can look at the maximum options when we search in Magicbricks. The maximum options are in Viramguda, Alwal and Damaguda. These are areas, actually I would say that Kathir, the best way for you to figure out is you've got a budget in mind, right? Now go to the site and put your query on Magicbricks, the search bar. You'll get a series of options. Identify the localities that you are interested in, and these are the localities that you want to check out. Now go to a section called Advice on Magicbricks. There we have been rating localities, not only Magicbricks, but a lot of users have started rating the localities. You will be able to, when end users rate localities, they are also giving their perspective of what are the problems that you have in those localities. Once you check those out, you will be able to figure out which are the areas where there is no drinking water problem, there is good connectivity to city center. Sometimes the connectivity may be good, but you may be at the cusp of a traffic jam. These are issues that people who stay in that locality can give a perspective on. So do use all the features that we are providing to you, because this helps you make a credible choice, especially if it is for end use. An end user must always look beyond property prices and what amenities are offered and check out the convenience of living in that locality. Venki, you want to add something?
I think you said it correct. I think a lot of information is available that doesn't generally get captured in these portals. So I think your take on getting users to provide inputs is actually very, very powerful. I think people, only when you live in that place, you get an idea of what are the benefits. And I think there are 2 parts to it. One is the users bring in new things that need to be considered. and they can also give you a good flavor on the existing things that are already there. Like, for example, power situation, water situation, they can already provide you that information. But at the same time, they can give you insights on, for example, traffic. Like whether, like if you're going to be going towards a particular work area or workspace, you might end up spending 1 hour or 2 hours on the road just because the road gets clogged every day. You know, that sort of insights you do get only from users, and I think everybody should go towards that model.
Thank you so much, Venki. Over to you, Aradhana. Thank you, users, for joining in our webinar.
Thank you very much from IIM Bangalore.
And I'm really thankful to our guest speakers today for conducting this informative webinar with us. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree. Thank you, Uma. Thank you, Venki, for taking the time out and having us. I hope you have a great afternoon ahead.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thanks a lot. Bye-bye.